What's up, guys? This is Leo with DRIPCalc, and Bitcoin, if you haven't heard, has gone to $89,000. So the Trump pump is real, and the reason why Bitcoin and crypto is running is because this year before the elections, Trump went to Bitcoin conference, and basically he became a crypto bull, and he said he will deregulate the industry, make it easier, probably create a national Bitcoin reserve fund, and all of that good stuff. So anyway, in this video, I want to talk about CONY, which is a YieldMax COINBASE options income ETF. Okay, but before we talk about CONY, we need to talk about COINBASE because that's the underlying, that's the stock that is the base for CONY. Okay, so basically, anyway, long story short, last night I posted that COINBASE was trading in the after hours for about 348. I mean, it was a 27% in one day, and if you look at the charts of COINBASE, just 1 week, it's up 72%. And if you look at 1 month, it's also up to 72%. But like over here, right before the elections, they were trading at $179. Okay, and now it is today. It dropped as predicted yesterday. So in my tweet, by the way, guys, you should follow me on Twitter at DRIPCalc, and I'll put the link in the description. But anyway, so what I said is like, be careful buying at these prices, because this might be an exit. You might be an exit liquidity and a long time back holder. So basically, COINBASE has a tendency of going up rapidly and then going down also very rapidly. Like over here at IPO, they went to 330, 381, 382, and then within like a month they collapsed to $200. Then they went up again, boom, and then they collapsed all of the way over here to below $34. And yes, there was a crypto winter, yes, there was an inflation, blah blah blah, but the point is that this stock runs up and then it runs down, and right now it could run to $400, maybe even $450. Like, that would be completely insane, but it can do that, guys. I'm not saying we will not. And we have really good prospects. Like I said, Trump is the president. He has become crypto friendly. He'll kick out Gary Gensler and from the SEC, and basically fix the regulate, not fix, but loosen the crypto regulations. You know, that's all good and dandy. And the Bitcoin is probably pumping to over 100 grand, maybe even like 150, 120. Who knows? It's like 89,000 right now. But COINBASE, it rises up very fast, and then very fast it crashes. And so be careful, like, buying at these levels. You know, long term, they have a lot of competition from Robinhood. Robinhood is taking away a lot of their retail customers from COINBASE, yeah, the future for COINBASE is not as bright as some may think. Like, yes, they began trading futures, no pun intended, the futures on Bitcoin and other crypto products, and that's a very high margin item. And but still, you know, Robinhood has had an amazing month in terms of new clients, new capital brought over, and they're eating COINBASE's lunch as far as crypto trading. So I personally would not be buying at these levels. If you watch my older videos, I was buying COINBASE, like I was trading it here. I would buy like at 35, leave at 50. I thought it's going down back down to 35, and so I never bought back. But over here I was buying for like $75 in the summer. Like over here I was buying. I actually made a sell order, and instead I bought for $75, and so I just kept the shares, whatever. So like, my shares are printing right now. I also bought a 381 on IPO, and so yeah, like, they're printing but not so great. And what I did is I actually sold the covered call all the way into 2027 at the maximum, and right now those guys, they're paying like 80 bucks per share. Like over here I was buying it for 70, and like the call options are paying 80 bucks per share, 90 bucks per share. It's like insane. Anyway, I don't believe this is a long-term run. I believe it's going down below 200. Robinhood will eat its lunch, and so I want to capitalize as much as possible. Like, I'm not saying it's a bad stock. I'm not saying it's going out of business. You know, it's way too big to go out of business, but I don't think it's going to grow as crazy. And if I get assigned on my shares, hey, be it. I will only be happy. You know, I sold a $510 call for like $80-some. It's insane. Anyway, that's not the point of the story. I was talking about CONY, okay? And CONY, if you don't know, is announcing their dividends tomorrow. Let's reload this page. See how many hours until 11 hours until announcement. And so it's going to be CONY, OLTI, NetFlea, AMD, PP, MSFO, Fiat, and Ebony. So Fiat is gonna be in a lot of pain tomorrow. It's pretty cheap already because Coinbase ran so high so fast. Anyway, but Conny holders, they're sitting much prettier than they used to be. We will likely have about $1.50 or maybe even $2 dividend. So that's not a prediction, but what I wanted to talk about as far as Conny, let's look at the Conny positions. Now this is yesterday's positions. Today they might have made some trades. In fact, it's very easy to see if they made trades. So like you can do it on YieldMax website, but often their data is either delayed or already not available. So we created this YieldMax archive downloader, and so let's download today's trades, see what happens. Yep, let's open it up, and it's freaking empty. see the YieldMax still doesn't have the trade. This is so ridiculous. So that's why we actually have a second download at 11:15. Let's see if they if maybe it has updated on their website. Nope, it's still empty. Yeah, see, that's why I created this automated download tool. So because often they basically don't update their files on time, and then after midnight the file is gone. So that's why we make this automatic backup twice a day at 5:30. Sometimes they already publish it by then, and also at 11 p.m. Anyway, so they probably did not make any trades today because they made them yesterday. There was a lot of trades, and now their positions, they're expiring not this week but next week. Okay, so they rolled them, they bought, they sold, whatever. So let's take a look at their synthetic position. So a bigger chunk of it, like 22,000 contracts, they're sitting at $230 synthetic position. That means they're up almost $100 per contract, or just about $100 per contract. That's amazing. Like, yeah, there is some cost to it, you know, some put cost, but look how high, look how expensive the call is. Okay. On the other hand, they also rolled their synthetic to 320, and basically it cost them to open it. Oh. Anyway, no, those are actually like market prices, but again, they're yesterday's market prices. Let's see if we have updated holdings. So you select Conny over here, boom. Let's see if they have updated holdings. They probably do not. Yeah, basically I don't think there's any change here. Yeah, so this is the same as this one. Anyway, so what happens? What will happen likely if Conny continues to run? Let's say it settles like 269. Okay, so all these contracts, all these covered calls, they are, except for this one, they will be underwater. So what Conny will have to do is to sell this 230 synthetic, and basically they'll lock in a lot of profit. Maybe some of their spreads will print also, maybe not, but I mean we're like 12 days away from the expiration, so a lot can happen. But let's say Conny goes to $400. So all of these guys, they're in the money, but all of these guys are printing, and we have 230 synthetic, and we're making crap ton of money. And you know what's gonna happen? I will sell all of my Conny, because most likely if that happens, Conny will go to say $24, and that's my mark. $24 is where I sell. That's the highest price I ever paid for Conny. A lot of it is below. I think my average is like 18 without including like the dividends. But if we go to 24, I take profits, because what happens after that, I'll show you. All this synthetic will become like 350, 390, whatever the price is. They'll have to roll it, and they'll have to use a synthetic bailout. And what happens after that, most likely, and we've seen this so many times with Conny. Let's go back here. Coinbase drops from like over here throughout this year. It was like so painful to watch. They sell their weeklies too close to the money, and the Coinbase runs. They have to use the synthetic bailout, or what they do sometimes is they buy back those or those in the money weeklies. They buy them for cash. They lose a crap ton of money. Like at some point, I think they lost on one trade was $60 million. I made a video about it. I don't want to go back. It doesn't matter. But basically, they not only they lose money on the weeklies, they also increase their synthetic price to say like 260. Okay, and in our case, it could be like 370. Okay, and then coin drops $100, and now we're in a hole by $100. And so I've been through this thing before, and what I'm gonna do is I will personally sell because yeah, I've collected a lot of dividends and all of that good stuff, but yeah, Coinbase could continue running to 450. I mean, some idiots might be bidding 500 for it, you know. That's possible, but if it runs that high, they'll have to use their synthetic, and then inevitably Coinbase always collapses. And let's say it's 400 and it collapses back to 275. 275 is a good price, but when you drop $125 per share and times so many contracts, the pain will be real. And so, guys, the point is, like, I don't know if that will happen or that will not happen, but I think over here they already they had to use the synthetic. This wasn't always 320, this was 230, and look, it expires in 2025, February 21, 2025, but they already upgraded it because either they were like forced to do it. I haven't followed their daily trades, but the point is that their synthetic is not, they're already up about in the money on part of their synthetic, so this dark orange, okay, see right here, and they'll be forced to use their 230 synthetic. Yes, they'll make a crap ton of money in the short term, but they might lose money in the long term because then Coinbase collapses and they're in a hole by $100 on the synthetic, and I don't want to see through that again. I would rather sell, wait for it to collapse, and buy back at like $11. So that's my, it's not even a dividend play for me, it's just like I've seen this happen way too many times. I would rather get out for now, wait for it to collapse, and then like when it drops to like $11-10, that's when good time to buy. That means the Coinbase is really low, and there's a good chance it's not going to drop anymore. There's always a possibility it will, but so that's my plan, guys. And one of the reasons for this, so if, for example, like you're sitting on $300 right now, yeah, and what they do is they sell $325 call. Like, you know, it's a crypto bull, you know, it's Trump pump, and you know that Coinbase will pump. Sell it further out and forget about the stupid spreads. Look, they paid a bunch of money for the spreads, and yeah, some of them are printing now, but then like you're losing money over here and over here and over here. Yes, again, like I said, it was 347 last night, and who knows, maybe it will reach $400 by next week. And all of this will be underwater. This will be printing, but not as much as these guys, and they'll have to use all of the synthetic. They'll upgrade to $400, and then if Coinbase collapses, we're in a hole. So I really don't like that they started doing spreads. Instead of doing spreads, you know, like you pay money for this. Like, put this at 345 instead of 325, and forget about the spread. Just go out like 10-15% out of the money. Like, yeah, nobody can predict a 27% move in one day, you know, like that's understandable, that happens, but knowingly selling 3-5% out of the money with a volatile stock like Coinbase, it's you know, it's a suicidal wish. And so I don't want to be part of that. I will get out, collected good dividend, and maybe come back, maybe go into something else. I don't know. I'm loving my Bito. By the way, guys, I just released my video on Bito, so check that out. But yeah, good luck to everyone. I think we'll have a crazy dividend today, or rather this week. And because these are expiring next week, at the end of next week, so we still have like 12 days. I'm definitely getting this week's dividend. Maybe even next week's dividend out. No, that's next month. But yeah, if we hit $24, $25, I'm definitely getting out. But I'll still make occasional updates. Yeah, I will link the video where I describe in detail how they like mess up on their weeklies. I'll put in a video description and also just show you which video. So here's the video. It's called "I am done with YieldMax," and basically I analyzed daily trades for Coney, and look at this. They lost like $70 million. Sorry about that. They lost $70 million in like 1 week of trading. So it's completely insane. And biggest reason they did so is because they sold their weeklies too close to the money. And you cannot do this. Like they'll go for like super high yield, like 130% yield, but then they'll lose, you know, 3 times more than they could have made. And but completely stubborn and won't like go a little bit further out and won't, you know, most people will be happy with 70% yield as long as you don't lose them money. But this is completely insane, and that's why Coinbase, like, yes, there was a problem that Coinbase went down to $170, but had they been smarter, they wouldn't be booking this the $60 million loss over here and $15 million loss over here. And I think for the months it was $106 million total loss for this fund. So like, had they been smarter about it, they would not be booking half of these losses. So, and the NAV would be like much more stable. Anyway, so that's my position on it. I'll link this thing in the description. Also, there's timestamps here. So like this, the one where I discuss the daily calls, it's a coin manager. But basically, this is way too old. This is from August, but it just shows you how they operate and what I don't like about this fund. Now, as I said in my previous videos, like in this one and in the other one, I wasn't selling any of my funds, any of my YieldMax positions, but now that I expect it to be, 100% above my cost, above my highest share cost. Okay, so like I said, my average is like maybe 18, but I have some shares like close to $24, and so I want to be above that. I don't want to book a loss even like on one share, and so I'm waiting for 24 or above, and I will get out, and we'll see what happens. So yeah, that's it. But overall, guys, like, it's a good week. Congrats to all the holders, and congrats to people who bought Conny over here. Let's just look at the price chart. Like over here was like $11, and even over here it was below 12 at some point, or just around 12. And so like, if you bought over here, you are sitting pretty, my friends. And if you bought for 12, but if your average is like $11-12, I won't be selling. Like, you're doing great. You're gonna collect crazy dividends, but I wanna get out, and later when they drop again, then I'll pick up some shares on sale, and we'll see what happens from there. But at this point, my plan is to get out, at least out of this position. Other positions I'm fine with. I have Tesla, but that's basically like, it's also doing great, so can't complain about that. Tesla, MicroStrategy. By the way, I'm gonna make a video about MicroStrategy. I think it's super cool. MSTY, the YieldMax MicroStrategy fund. And by the way, let's take a look at how the funds are doing now that we had a Trump pump. No, sorry, long one. So that's the archive, and this is our dividend clock, as well as best performance. So yeah, MSTY basically took the crown of the best performer. They're up 167%, and they've completely paid for themselves. So they were, during initiation or like beginning of trading, they listed at $20, so the dividend alone already covered the cost of shares if you bought on the first day of trading. And this month's dividend will likely be around like $4 or $5. So that's the best one. Nvidia, slow and steady, really nice, good on the NAV, much high. Like, all of these funds started trading at $20, so this one is up $16 on the price, so that's like 75-77%. And so this one is up 30% on the price. Conny is still number 3, and it had a really nice recovery from $12. But I think it is short-lived. Once Coinbase starts crashing, we might face the music at some point. And guys, don't forget, we already have 1/3 of our synthetic position at 320. And so if Coinbase goes to like 250, and they starts like, to make up the difference, they start selling really aggressive covered calls, and they have to use the synthetic, they will lose that difference. So that's why I want to get out of Conny. I mean, they're lucky that Coinbase is such a volatile stock that it's like easy to book profits on it. But also, I think it's that this particular fund is a little bit mismanaged and a little bit too risky, and so I want to get out. Anyway, the wall of shame, SMCY. Wow, this is painful, but I'm not gonna comment on the company. I have like, basically, I know Supermicro as, like, I don't know about you, I was building computers back like in early 2000, and Supermicro was selling this overpriced, pretty crappy motherboard. So that's my memory of Supermicro, and accounting fraud. And so the people who bought SMCY, they're hurting big time. Yeah, there was one dividend of $5, but then you lose 50% of your share price. That's pretty horrendous. Crash, pretty horrible. And that's Coinbase inverse ETF, and then Fiat. No, I'm sorry, Crash is the Tesla, and Fiat is the Coinbase inverse ETF, and they're also hurting. Year to date, or 1 year performance, minus 26%. Yeah, that's pretty painful. Now, because of the Trump pump, most of these guys have recovered. Like, if you watched my previous videos, more than half of them were in the red completely. Now only half. But half, actually, look, yeah, on price, but look, there's a lot of green in the total return columns. So like a month ago, it was much worse. Yeah, but basically these are the best guys here, and you can actually also compare Misty versus the underlying. Like you click this VS button, you can compare each of the. By the way, let's look at the MZ. They were at some point like doing better than Amazon itself on total return. Okay, so Amazon has surpassed MZ, but still it's like plus 55% total return versus plus 60%. That's pretty respectable, guys. Very respectable for MZ. Steady and slow. They, you know, they have pretty low yield, pretty low dividend yield, but they keep paying good dividends. The NAV, they're above their initial $20 price mark, and the dividends. So yeah, they're doing great. Misty is amazing. We're not gonna look at that. Apple, meh, never liked it. Phoebe, I like Phoebe, guys. I have good average on Phoebe. They pay very good dividends. Meta is doing great, but Meta is obviously outperforming Phoebe. But yeah, look at that. Well, actually, plus 85% on Meta, plus 65% on Phoebe. Not bad, not bad. I mean, like, yeah, Meta made more, and they did provide dividends, but still not bad. Anyway, yeah. So if you want to check out these funds, go ahead and check them out. But guys, just be careful with Coinbase and Conny. It goes up fast and then it comes crashing down very fast as well. So yeah. All right, thanks for watching, guys. Smash the like button if you enjoyed it. Subscribe to the channel. And by the way, we just published a video about BITO, one of my favorite stocks, favorite ETFs. It's Bitcoin related, and also this poor loser YBIT, which is YieldMax option strategy on BITO. Like, why would you buy that when you can actually buy BITO? Like, compare them. Now, granted, this one is only up 25% in 7 months, essentially, because it goes to the inception of YBIT, and this sucker is in the negative, and this is while Bitcoin is making all-time highs. So yeah, YBIT is a crappy ETF. I think they should get rid of YBIT. They should get rid of what you call it, AIYY, MRNY, all these suckers. They should get rid of it. ORC, like, just get rid of them, return the money, and clean up the YMAX. I like YMAX, but those crappy stocks, they pollute the waters, so to say. So get rid of them. They suck. They're horrible. They don't make money. Look at the losses. AIYY minus 57% and minus 25% total return. This guy crash. But those are inverse. They are not part of they're not part of YMAX or YMAG. GDXY. Like, gold is making all-time high, and these guys are losing money. Ugh, horrible. Yeah, there's MRNY. Where is this sucker? This is down 43, 80, 68%. Yeah, guys, just close up shop, get rid of these losers, and you know, concentrate on the better ones, and people will just move their money to the better ones anyway. MSFO, don't like it. Surprising that it shows like minus 12. I guess it goes from the closing price, but yeah, anyway. So YMAX has some really good ETFs, like NVIDIA makes decent money, very stable NAV. So yeah, not bad. Misty, crazy returns, also pretty risky. But Conny, good returns, but very risky. And so, like I said, I'm getting out. With that said, guys, smash that like button. I really would appreciate that. Subscribe to the channel. So YouTube algorithms really like when people subscribe to the channel while watching the video. So that really helps a lot. And I'll see you in the next video.